Hey, welcome back to The Dive. We saw the launch of the first two European-listed uranium exchange-traded funds, and our guest today is here to share his thoughts on the matter, as well as the uranium price, geopolitical tensions and their impact on uranium supply and demand, Japan and the future of nuclear power, the company's acquisitions, and what investors should look out for near term. He's the CEO, president, and director of Uranium Royalty Corp. Scott Melbye is joining us today. But before we bring you today's video, do me one quick favor and just go ahead and smash that subscribe button below me there so we can keep making you these videos. Hey Scott, welcome back to The Dive.
Hey Cassandra, it's great to be here.
Yeah, it's so great to have you back. Okay, so uranium prices are at about a third of their all-time high. How are you viewing the uranium trade right now?
Well, actually, we're quite excited for a number of reasons. While it's a third of what its all-time high was, we're up significantly from the cycle low of, I think, in 2016 going into 2017, uranium prices were $17 a pound, and we've traded as high as $63 recently, and now today trading around 50. So that's quite an exciting recovery for a commodity that's been in essentially a 10-year bear market. And there's a lot of good fundamental supply and demand reasons and geopolitical reasons and just mega trends towards green energy, all pushing the uranium price up finally. It's welcome incoming.
Now, we saw the launch of the first two European-listed uranium exchange-traded funds, coming hot on the heels of a $1 billion US uranium ETF acquisition. With the looming European energy crisis sparked by the war in Ukraine, do you think that there will be more fund activity on the nuclear fuel investment side?
Yeah, absolutely. I mean, there's been two drivers. One has been the move towards decarbonization of our economy and our energy policies. And that's definitely favored carbon-free nuclear in the mix. But of course, energy independence has become a big topic everywhere. And the war, the invasion of Ukraine by Russia has really highlighted how important it is to have control over our own supplies of critical minerals and energy supplies in times like this. And I just returned from Central Europe, where I met with the energy ministers of countries all the way from the Baltics through Central Europe down into the Balkans. And every single one of these countries is really caught between a rock and a hard place. They have to phase out their coal-fired generation to please the European Union, but at the same time, they can't turn to Russia for natural gas. And that's really favoring their existing nuclear power plants and their desire to build new nuclear power plants, whether they're the bigger units or the small modular and advanced reactors that are emerging.
Now, about the Russia-Ukraine crisis, what do you think the implications are from the current geopolitical tensions on the supply and demand of uranium?
Yeah, well, ever since the breakup of the Soviet Union, we really understandably kind of embraced Russia's emergence into the Western markets of nuclear fuel. I think, frankly, we ended up putting too many eggs in that basket. But as it stands today in the United States, for example, we get 50% of our uranium from Kazakhstan, Russia, and Uzbekistan, and about 20-25% of our uranium enrichment services, which is way too much for a country like ours that has 1 billion pounds of resources in the Western United States. But the fact is, we became reliant on Russia. And so whether there is a ban on Russian uranium and nuclear fuel imports, like is being proposed in the US Congress, or utilities just move away as a preference from Russian supplies, or Putin himself embargoes exports to the West, we're going to have to figure out how to replace those supplies and perhaps in a hurry. So I'm focused as both a royalty provider to uranium companies that are developing and bringing on new production, or as in my role at Uranium Energy Corp as an American uranium mining and development company. We're looking to fill that gap, and I think it can be done, but it's really going to cause a shift in consumer preference and supply and demand. And the impacts of Ukraine and Russia on the nuclear fuel markets are quite extensive. We get about 50% of the uranium supplies in the US from Russia, Kazakhstan, and Uzbekistan, almost 25% of the uranium enrichment services. So whether those supplies come to an end as a result of a ban, like is being proposed in the US Congress presently, or consumer preference to move away from Russian dependence, or Putin embargoes supplies going the other way to the West, Europe and the United States and North America, we're going to have to figure out how to replace those supplies. And the good news is, in the United States, we have 1 billion pounds of known and likely resources in the West. We can rely on Canada, supplies, Western Europe and Australia. There's a very robust industry without the Russians, but that will be a transition and will likely result in higher prices in the interim as the market adjusts to moving away from Russian imports.
The U.S. Department of Energy is working on a broad uranium strategy to ensure a steady supply of uranium for U.S. nuclear requirements. So do you think that the U.S. has the capability to replace Russian uranium?
Yeah, we do. I mean, the uranium resources in the Western United States are highly underutilized. We have probably 6 or 7 companies in the Western U.S. states that have operations like Uranium Energy Corp in Texas and Wyoming that can ramp up to meet that increased demand. But the U.S. government does recognize that whether it's through the establishment of the Strategic Uranium Reserve, which has been very slow to get off the mark at the Department of Energy, but it's fully funded for this year, that needs to happen. And we're also looking to bolster the uranium conversion and enrichment portions of the fuel cycle so that we can truly move away from Russian supplies. And that is not just for the existing reactors, but also these advanced and small modular reactors that use different types of fuel types, that fuel assemblies that the Russians currently produce, and we don't want to have any reliance on going forward.
Now, Japan Trade Minister Koichi Higuita said that they will aim to stop importing coal from Russia as a longer-term goal. Where do you think Japan falls into the future of nuclear power?
Well, energy is a critical issue for Japan, and they're not like those of us living in North America. You know, we're blessed with abundance of varied energy sources. Japan, not so much. And so the slow restart of nuclear power plants in Japan has really caused them to rely on very expensive imports of coal and LNG. And going forward, you know, we're seeing an increased pressure from industrial groups within Japan to move more quickly with the restart of these units in Japan that can reduce their reliance on expensive fossil fuel imports. And so, again, energy independence is not just for Europe and North America, but it's hitting Asia as well. And you know, of course, who knows what happens with China vis-a-vis Taiwan and what could happen there. So Japan really needs to focus on getting those nuclear power plants back up and running. They're intending to rely on nuclear power for 22% of their needs going forward.
Okay, so let's come back and talk about Uranium Royalty Corp. The company published its additional uranium concentrate purchase commitments totaling 200,000 pounds a few months back. Could you give us some color on this?
Yeah, so Uranium Royalty Corp, we've been quite active in 2022. We have a number of exciting projects underway. We have added to our physical uranium holdings. So we believe that as uranium prices have come out of this bear market and have increased significantly in recent months, we've been big buyers of the physical commodity and warehousing it on behalf of our investors. So we're now up to close to 1.6 million pounds of uranium inventory at an average cost of about $42 a pound. So in a $50 market, we've realized a nice gain on that, and I think we would continue to build on that going forward. We do have an offtake arrangement that we've signed with CGN out of China from their mines in Namibia, which will give us another 500,000 pounds over 3 years at an average cost of $47 a pound through 2025. So that's an important part of our strategy.
Now, the company also announced the acquisition of an additional 1% gross revenue royalty interest on the Lance in situ recovery uranium mine in Wyoming, USA. What does this mean for the company?
Uranium Royalty Corp we have a global focus, but we are literally just looking to the universe of projects that can be developed quickly, come on at low capital and operating cost to be competitive in this market going forward. We probably need 8 to 10 mines coming online in the second half of this decade. We believe Lance is one of those. It's in northeastern Wyoming. We have now a comprehensive royalty over the entire project, and in situ recovery is very environmentally friendly, and again fits that low capital cost, low operating cost profile that should make it one of the earlier movers, and they're taking steps to kind of move from a test mining phase into a full operational status. So we're really excited about that acquisition, and look for us to do more, especially in the in situ space in the US. We really think that's probably one of the most attractive uranium districts in the world today.
Okay, so Scott, before we let you go here, are there any other stories that investors should be looking out for with Uranium Corp over the near term?
Yeah, I mean, I just think we're all watching the markets go through this. I think it's nothing short of a meltdown of broader markets and all equity classes, including crypto and gold, really suffering with what's going on in the world today. But I would encourage investors to look at those pockets of companies and industries like the uranium industry and like Uranium Royalty or Uranium Energy Corp, where their fundamentals haven't changed. Our industry is just as exciting today as it was a month ago, yet a lot of the equities in the space have dropped 30 to 40% or more, and many trading at just a fraction of their net asset value. So again, look at this current turmoil in the markets as an opportunity to get some of your favorite companies and invest in your favorite industries at fire sale prices. So again, we think uranium fits that narrative perfectly.
Okay, great. Well, thank you so much for joining us today, Scott, and giving us the update. It's been so nice to talk to you again. I'll talk to you soon.
Great. Thank you very much.
To our viewers at home, thank you so much for tuning in today. We'll be back again tomorrow with the latest news and updates. So be sure to stay tuned by hitting that notification bell and subscribing below before you leave.